Climate resilience is important for the property sector because in the end it's about understanding risks related to the physical environment. So what we've seen is that increasingly investors are trying to understand the risks that are associated with their real estate investment portfolio.
Resilience is not just about what occurs in extreme weather events. Resilience is about what happens every day. It's really important for us to continue the investment in upgrading systems, air conditioning, electrical, lift systems, stormwater systems to make sure that they're always functional and that they are resilient to weather extremes, but certainly at an everyday level. This is really important because we're breaking all kinds of weather records now, so we're faced with a future that might be the new normal.
There's two key stakeholder groups that we focus on, our investors and our customers, the tenants and the occupants of our building. So for our investors, there's duties around Section 180 of the Corporations Act with directors' duties and the fiduciary responsibility to disclose climate risk. So there's more and more reporting, investor expectations around our response to climate change and the physical risks to the assets which we manage on their behalf. And then from our customers' perspective, it's about business continuity and resilience of the assets which we host them in and in supporting them in their success. It's their businesses that ultimately underlie our business success.
What we've seen is that the risks coming from stressors and shocks actually will impact property fund, portfolio and building performance. The stressors are, let's say, the long-term vulnerabilities that can impact organizations and communities, whereas the shocks can and will impact, let's say, the underlying assets. So this is why investors increasingly demand their managers to report and disclose on how they are addressing these risks. For Stockland, because we rely on rental income, any disruption to business or disruption to services in the built environment is a risk to us. So any investment that we can make in capacity, reliability and durability is an investment in resilience.
I think one of the key successes is that we've got a zero carbon target now for our office fund, and that's something that we're thinking through the process of adopting science-based targets in other funds as well. So I think it's really encouraging that the property sector is responding to the challenge of climate change. The real estate sector is much more willing to take appropriate action, not just to be able to be more resilient, but also to understand what it is to be resilient. And secondly, and that's again, I think driven mostly by the capital markets, is that investors are seeing that being able to understand the risks of their investments actually provides a positive potential on their bottom line in terms of enhancing and protecting shareholder value when it concerns the underlying investments in real estate. And in that space, the voluntary commitments through global initiatives like the Renewable Energy 100 is really cause for hope that the corporate sector is taking this climate change challenge on board and is doing really progressive voluntary action ahead of regulation.